the dollar and gold will initially go up together. But then at some point, the market will realize that, wait a minute, I'm getting all these dollars, but look what's happening to gold. Gold is, dollars devaluing relative to gold. I need to get out of that and get into the gold market. And once that happens, the run to gold that will take place, that's going to be, I think, a historic event because there aren't many places people can go. I don't think they'll be looking at the real estate market because they don't want to wait 30 or 60 or 90 days to close the deal because they're worried about what the dollar's value will be over the next 90 days.
Ladies and gentlemen, welcome to the special interview. Today we have a returning guest to the show, David Morgan from themorganreport.com. And I got to tell you, there are a few people that you need to follow on a weekly basis to keep up with gold, silver, and the miners. And David provides that for free every single week. But when you really want to get more of it and you want to look at what David's trading into, what he's trading out of, and what his outlook is for the sector in general, you need to subscribe to the Morgan Report. I can't recommend it highly enough. David, I'd like to thank you for returning again to Silver Doctors.
Well, thank you, Paul, for the nice introduction. I appreciate it.
Now, David, we're in the middle of October 2019 here, and there seems to be a lot of stuff going on. We've got the Middle East looks a mess, Brexit. One day there's a deal, the next day there's no deal. The same thing with the trade war. I'm looking around and I'm seeing problems with China and Hong Kong, the geopolitical situation. We've got the Fed back to the repo market interventions. What are some of the things that are on your radar right now, David?
Well, I think you covered almost all of them. And, as you wrote me earlier for the interview, I mean, you also had the financialized gold and silver products such as Barclays new G-Bug and S-Bug, ETFs or ETNs. I mean, this is more dilution to the market. I mean, people think they're buying gold or silver, or even if they understand what the ETN is, buy it because it's convenient. It's a click of the mouse. They don't have to go to a dealer. They don't have it shipped to their house, et cetera. So I'm not that favorable to them. I want to be consistent. So let me state it as a fact. My take on being a free market adherent is if you own the physical metal to your satisfaction and you can, touch it, and you want to branch out into an ETF or, that type of thing, I say fine. I think that's fine, and it's okay with me. And I'm not here to tell anybody, what to do with their life. However, if you think that an ETF is your sole investment into precious metals, you better think again.
And I find it interesting because that ETN from Barclays that we're talking about, those are zero fees, and they don't even pretend, like right in their prospectus, it says it's not even exposure. Like, we talk about like Sprott's PSLV, for example, and that's backed by physical metal, but these ETNs are just exposure to price. So it's like not even exposure to the metal anymore, David.
Yeah, I mean, it's a sad state of affairs, but it's consistent with the world that we're living in today. I mean, up is down, left is right. I mean, all these things are just incongruous. They just don't really match up with reality, and yet the system continues to plug ahead, I think, at a very interesting pace, meaning that I think that we are not going to go much further on this trajectory without having a major issue. And it could be a combination of things. It could be a, bond market crash coupled with a stock market crash coupled with a nation state that's entered into a war, and on it goes. And I'm not trying to sell doom porn. I'm just trying to explain that we are in a situation that you really need to pay attention to and protect yourself financially, at least to some extent. I never said put it all in gold, put it all in silver. I said, look, 10% is probably enough. Under these conditions, I actually think 20% is a better percentage because there's a much higher probability today, Paul, than there was 10 years ago that things are going to unravel in the next couple of years.
Mm-hmm. And I'd like to explore that a little bit further with you, if I could, David, because, I think I've heard you mention before that, the US dollar has basically already hyperinflated, where before a person could retire comfortably with $1 million and draw 5%, and now that's just a pipe dream. The way that I kind of think about it, I look at like I would call a great print. We all seen that chart where the dollar's declined in value since 1913. So call it 100 years of this slow hyperinflation. Then we've had this massive print since 2008, call it 2008 to 2018, when the Fed came in with 10 years of intervention. And now we're right back at it again. But my point is that long, slow print was over the course of 100 years. During the financial crisis, we had the interventions for 10 years. And now it seems like we're right at that point again with intervention. And we might not have, these things might not be culminating over the next several years, but we could be having something over the next year here that's climactic, in my opinion. Any thoughts to that, David?
Yeah, I think you've explained it well. I'll just, quote, one of the great stock market trader, I think it was Livermore, how'd you go broke? Well, very slowly, then all of a sudden. I mean, if you study any hyperinflation or any parabolic move, it accelerates. And so, as you explained, Paul, we've accelerated what took 100 years, roughly. We did the same in 10 years, and then we'll do the same in 1 year. And there's some point where the market catches on and says, I don't trust you anymore. And it's not a majority rule kind of a thing. It's just enough money that moves out of the dollar, out of the bond market or stock market or combination thereof, and that starts the panic. I think the move will be out of the bond market primarily, and then the safe haven will be go to cash. So I think the dollar and gold will initially go up together. But then at some point, the market will realize that, wait a minute, I'm getting all these dollars, but look what's happening to gold. Gold is, dollars devaluing relative to gold. I need to get out of that and get into the gold market. And once that happens, the run to gold that will take place, that's going to be, I think, a historic event because there aren't many places people can go. I don't think they'll be looking at the real estate market because they don't want to wait 30 or 60 or 90 days to close the deal because they're worried about what the dollar's value will be over the next 90 days. Once we get to that point, look out. And, there's people that tell me I'm nuts, I'm wrong, it's never going to happen. Every fiat's failed, so history's on my side. As far as the timing goes, that's really tough. Could I be off? Yes. Is it going to go another 10 years? I just doubt it. And yet, if you asked me in 2008, if we would go to 2018, I would have said I really doubt it. So, there you go.
Mm-hmm. Interesting. And that's interesting about the dollar because what are you making of this, this market QE repo market? It's not QE, it is QE. Like what are your thoughts? Because it is clear that the Fed has re-engaged on aggressive monetary stimulus. How do you see that playing out? Is the market coming to terms with this? Is it priced in? Is it not yet priced in?
Well, I think it's priced in for the most part. But it gets back to what I was just saying, that this is an acceleration to some major problem in the banking system where they're insolvent. There's a liquidity problem, and the Fed has to add cash to the system. And that's because everybody's over leveraged and somebody's in trouble or a combination thereof. They're all interconnected. So they have to kind of keep each other afloat. And if they don't, one can sink the whole ship. So that's the basis of it. What exactly it is, I don't know. I'm not sure anyone knows. I'm sure probably in the Fed they know, and they may not even know. I hate to laugh, but it's true. I mean, there are some, there's quite a few banks out there, and, digressing for a moment, Paul, but, when Ashanti blew up, they had to get some specialists in there to look at the book because the derivatives were so complex, no one really understood what the hell they were. And I'm sure that's a metaphor for exactly what's going on in the banking system. I mean, some of these derivatives and default swaps and all this crap that goes on, which is pretty much all make-believe, is not that easy to unravel. And then you got, of course, the computers running everything with the algorithms that they use to trade with every day. And, in some cases, in a split second basis. I mean, we've gone completely mad. There's no real rhyme or reason to the markets anymore, unfortunately.
Mm-hmm. That's very interesting outlook on that. With gold, turning to gold here, the last time we spoke was in towards the end of July, and One of the things you talked about was that you were going to be looking for gold to start building a base, but you weren't exactly sure where it was. Maybe it was somewhere above 1450, I think you said. And it looks like 1500 of this base. And we've been at this 1500 level, and it's been holding pretty nicely. We've gone, call it 1485 to 1525. But is 1500 the base that you've been looking for in gold to be built? And what is your outlook for gold going into the rest of the year, David?
Sure. Well, what I did say pretty consistently in almost all the interviews was I was looking for gold to get above the 1350 level, which is a breakout point, and it did that. And then, how high is high? Only the market knows. We got to about 1550 round numbers, and we backed off. And as you said correctly, we're around 1500. I'm actually looking for 1450 print. I think it's going to get a sell off, and it won't be a base. I think it'll be a V bottom type of thing. So I'm looking there to re-enter on my trading positions. But as I've teach and also practice, I have a core position about 75% I just don't touch. I do think that since we're getting so much as you outlined with the trade war, everything else that you mentioned, and gold's at 1500. I mean, it's not reacting to fundamental news right now, which is okay. Did it get ahead of itself? It's hard to say yes or no from a technical perspective only. Yeah, maybe it got slightly ahead of itself, but it's got a long ways to go. So if you don't wait and buy it at 1500 and it drops to 1450, you really don't have much to worry about.
Yeah, and as far as silver, silver's been pretty volatile. Silver, the last time we spoke was at 1650, and then it made that really quick run up to 1975 that one day. And then you see we pulled back down and we've consolidated here about 1750. What are you looking at right now on silver, David?
Well, as I've been saying pretty consistently over the last year, I think that gold's going to have to pull silver up, and that's obviously been the case so far. I do think once the metals get reestablished as safe havens, that silver will outperform gold. For silver, I see it again just to be lagging the gold market for now. And by the way, I'll be speaking in New Orleans at the gold conference down there. I'll be the last speaker on the last day. But I think I'm coming up with, for me anyway, and a hope for the audience, because I'm there for them, not for myself. But it's going to be the difference between gold and silver. What if silver was treated like gold? And I'll just give you like a teaser. There's the gold standard, but there's junk silver. There's the golden rule, but there's melt value for silver. I mean, if you look at the contrast, so if silver was treated like gold, what would it be like? Central banks hold X amount of gold. They hold no silver. What if central banks held silver? So it's a new fresh look, at least in a presento mode, meaning where someone's on stage with slides presenting this. Maybe I'm sure there's some deep thinkers out there that have thought about this, but I've thought about it for years and thought, it's time to do it, to get up there and shout it, because I still believe that not only will silver outperform gold, that most people still don't understand the monetary basis of silver. I do because of my age and my passion of the history of money. But, it's been devalued really from the crime of 1873, and I go on and on. So, Paul, back to you. I'm sure you've got more questions.
Are we close to a trade deal? Are we going to have a trade deal?
Boy,
the markets...
what I think could happen is a partial trade deal. We'll agree on this. We're going to do these kind of exports for the farmers, and it's going to be this much over 3 years, and we'll change it over the last 2 to the 5-year deal, whatever. And nothing else. We're going to drop these sanctions, but keep these. I think it could be piecemeal. I really don't know. It's rather upsetting for free market thinkers such as myself to see, the kind of situation win, but at least, and I'm not favorable to any political occupant of the White House. Believe me, I just don't like it, but you can't ignore it.
Yeah.
But at least it's out in the open where everyone can see it. I think that's probably a good strategy as far as I'm concerned.
Yeah, that's one of the things we were discussing yesterday on our live show. We were talking about, we don't like to mix politics into it, but the economy has become so intertwined with politics now that it's so hard not to. And one of the things that I think people are missing, and maybe you can speak to maybe some of the things you've just seen, because I know you've recently come back from Mexico. And what I wanted to ask you is, I've seen some reports out of Mexico saying, because the trade war is not just U.S. versus China. There's also trade issues going on between the U.S. and the EU. There's also the USMCA. In Mexico, they call it the TMEC. And Mexico is basically, some reports were coming out last week talking about, um, Mexico is hinging its hopes on escaping the recession on getting the USMCA to go through with a trade deal, the NAFTA 2.0, if you will. Did you have any kind of like boots on ground assessment in Mexico? Do you see the country down there is sliding into the recession? Are they holding on? Because I know you've gone down there before for a few different events and conferences. And then could you just speak to that in general? What is your outlook on just the fundamental picture of just the economies, maybe south of the border and here? Like, do we have a good economy in the United States? And what do you see when you travel outside of the United States?
Well, the whole global economy, for the most part, is in a contraction, meaning that it's not doing as well. I mean, it's China, it's Mexico, it's everywhere. So that's pretty easy to answer. Yeah, there's pockets here or there. I mean, there might be a boom in real estate in a certain city, but as far as the big picture, the big picture, no, everything's contracting. Mexico's sentiment's very easy to pick up. They do not like Mr. Trump whatsoever at all. There's just some really great, T-shirts out there. One was "You're on the fun side of the border, relax and enjoy it." Another one is Trump sandwich with two large slices of white bread full of bologna with Russian dressing and a small pickle. And it just goes on and on. But no, it's really difficult in Mexico for the average person because it used to be such a big oil producer, and of course, their big fields we see depleted or depleting, and they've increased gas prices. And this new, more left-leaning president they have has not really done much for the people, which everyone thought. Well, I won't say everyone, but many thought before the election that once he was in office that they'd see improvements, and so far there aren't any. And this is talking directly with the people on the street. I mean, I'm not making this up or what my opinion is. I'm just reporting to you what they've told me.
Mm-hmm. And when we see reports coming out of Mexico, we hear about like the increasing violence and social tensions between like the cartels and stuff. Did you ever feel that you had any kind of safety issues down there, or did you get any kind of sense of tension in the air, or?
Yes and no. And the reason I'll answer that way is where I usually go is Puerto Vallarta, actually north of there, a town called Bucerias, and I feel very safe there. But in Acapulco, not so much. When I do the Acapulco events, I usually stay pretty close to the hotel, and there's guys with guns around, and that doesn't bother me too much because you see that in Colombia, and it's just part of the scenery, really. But nonetheless, and I'm sure Jeff or whatever wouldn't like me saying that, but you ask me how I feel, and it's just a feeling. It's not like, well, it's I don't know what the statistics are. I'm pretty sure Acapulco has more crime or whatever than Puerto Vallarta, but I don't know that for a fact. Anyway, I'll leave it at that and just say that generally speaking, in Mexico, I feel safe everywhere. Pretty much I've been, but a lot of these are remote areas with mining projects, as you know, Paul. Mm-hmm. But as far as cities, I probably feel safe in all of them that I've been to, which isn't obviously all of them. But Acapulco, yeah, there's a little concern there. I just don't feel like that's safe.
But the general feeling is that there's some fundamental issues in the economy that's saying it's not doing too well.
Correct. Yeah, no, it's not.
And as far as the big picture in the United States, like fundamentally, when you think about the United States economy, how do you see the United States economy performing right now?
Well, it's the best in the world. It's still kind of driving, this global idea that everything's going to be okay. But when you look under the carpet, you start to see the floor rotting. That's kind of a good metaphor for where we're at. There's still a lot of people out there that were like middle management in 2006-07 that have never retained that type of a job or income again. Mm-hmm. And this is a subtle thing, but it's still pertinent to your question. And that's kind of a good overview that a lot of people's lifestyles have gone to the decline rather than to the opposite the last decade or so. And the other part is to add on that, if you look at the financial mainstream. They'll even admit that for the first time ever, that the millennials can expect to have a lower lifestyle than their parents, whereas before the millennials, almost any generation that was up and coming could look forward to a lifestyle equal to or better than their parents. So things are contracting. The resources are getting harder to get. And we just got to be a little more cognizant of how we use, uh, the commodity sector, which is, the basics of building everything else. And I think be a little more wise. I mean, I'm going to digress, but this e-waste thing that's on the front page of the Morgan Report when you sign up for the free newsletter. I mean, this is a significant thing to be able to recycle all those precious metals that usually hit the landfills. And right now we're only recycling about 25%, which means 75% still hitting the landfills. This is a huge waste when we can actually recycle. We could recycle 100%. That will never happen. But still, we could certainly move from 25% to 75% or 80% or even 90 perhaps. And, this just takes the will and the technology, which, this little speculation that I own, I'm biased, can provide. So.
Yeah, I find that very interesting because, I don't know if this is like some sort of like psyop or what, but everybody talks about all these deep space asteroid minings of gold, and I don't think that's happening anytime soon. But e-waste, now that speaks to me as something that this is actually a practical solution to recover gold and silver and platinum, palladium, and precious metals from electronics. As a hobbyist, I like to build computers, so I can see the little gold plated in there on the processors, and I find that interesting. But so that will help in to step some of this. I guess my question is, that's going to help in to step to help with some of the peak gold and the declining production of silver and things of this going forward here, David?
Yeah, absolutely. If you allow me to throw my glasses on so I can read a little bit. I did this on another interview, but I think it's worth repeating. Okay. The annual production of electronic consumes an estimated 350 tons of gold, 7,500 tons of silver, and 300,000 tons of copper and other valuable metals, for a total of over $62 billion a year. Yet the UN reports that less than 25% of these electronics are actually recycled. That means that over $46 billion worth of these valuable metals are discarded in landfills every year. So, I have the, Yankee background kind of thing where you use it up and build it again and reuse it and, don't waste anything. And that's what a conservative is. Someone that values what they have, is pretty much happy with what they have, grateful for it. And, if they take care of their stuff, I mean, I don't want to be too much of a lecturer here, but, my truck is 19 years old. It isn't mint condition, but almost, because I take care of it. I value it. And it's better for the environment to buy a truck every 20 or 30 years than to buy one every year. Mm-hmm. Think of the amount of energy it takes to produce an automobile, for crying out loud.
Yeah, and the next time you buy one, you're going to probably have to fork over 100 G's for it too.
Well, I have to get a second one in the house to get another truck.
Winding down here, David, today, and I appreciate you giving your valuable time to us. The miners. The last time we spoke, the miners, shortly after we spoke, the miners took off. Right. And these are both, some of the ETFs and some of the companies. Obviously, some of the standouts have done differently. But in general, the mining sector has gone on a run, but then it's pulled back to about unchanged. Just looking at the charts here, we've kind of like round tripped back to unchanged. What is your outlook for the mining sector going into the rest of the year?
Well, the rest of the year, it's a tough call. The market knows more than anybody. It's, there's so much criticism on the net, and I made a great call. I said on September 3rd's letter, which is the previous Morgan report to the one that just was published, that's it. Take your profits on your trades. And I hope most of my people did. And that was pretty much the high day. And was it luck, skill, or combination? I think it was both. So, and then you said, so, the market's so volatile. That's why I think you should trade part of your position. But if you miss a trade, it can be psychologically tough. I can do it because I'm built that way or trained myself to be that way. If you sell at 20 and you got to buy back at 22, most people won't do it. For me, it's just do it, just pull the trigger. But anyway, most people, they sell and made a profit, and then they have to buy back higher. It's hard. So if you keep the 70-75% long term, you're not going to, watch everything move away from you, praying for a pullback that never happens. Anyway, bring me back in. So I think the miners are going to be in a trading range. I think gold could be in a trading range at the end of the year. I don't know yet. It depends kind of on, the political scene. As you said, it's so tied to the economy. If we get this trade deal through and things start looking better, you might see the stock market go up, putting pressure on gold to kind of stay put. And if you don't, you could see gold react again. I know the dollar's fallen off, but gold hasn't really picked up on that yet. So tough call. I'll be safe and say a trading range. If I'm wrong, I'll certainly say it on the next interview that, it broke out. It would have to go above 1550 and stay there for 3 days and then start moving up from there. I get a lot of criticism on my $2,500 gold call, which is for like a year out or something. Or 2 years, I forget what I said. I play that game because I'm asked to. Again, it's really a tough call, but I do know gold's going higher over the intermediate term, and to longer term, I do believe that the run to gold will take gold to a level that's pretty outstanding relative to the paper price now.
And that's even without the concept of any kind of global monetary reset, which fundamentally speaking, we're overdue for as well.
Exactly.
How does the Morgan report work? What exactly are you doing? Is this something like once a week you send out something, or could you give us an example of what a subscriber can get?
Sure. The premium service, which is I offer that in the mastermind. I do a monthly report, but I also do videos. I think they're more potent and more friendly to the subscriber. I'm one of the few that does that. So it's usually technical, but not always. And so I'll look over like the commitment of traders and why, you better be cautious here or might start thinking of taking profits here. I'll do, sometimes I'll go through the stock list. I probably don't do that often enough, but I do it. I'll take questions that I think are pertinent to the membership, and I'll review those and look at different things like why I think the palladium market is overbought relative to the platinum market. So and I'm responsible for what the people that are members want. So very responsive there because everyone that is a member gets to ask me 2 questions a month every month. And again, some of those that come in are like germane to everybody, so I'll answer them. And that's what you get. I mean, the idea is that you own physical first, and if you don't bother with the Morgan report. If you do that, you want the best leverage and the best risk to reward ratio. It's in the miners. I mean, if you go back to the 30s, on gold, you couldn't own it then. I mean, if you owned Homestake Mines, you made a fortune, and you were just grateful every day you owned that company. I think it'll be similar here because there's going to be such a run to gold that it won't only go into the gold physical market and, of course, all the derivatives, and most of those will be questionable at some point. They'll go for what the gold in the ground is, which means the major miners. I mean, there's trillions of dollars out there can't go into some of these penny stocks. There's no way. But they could go into the majors, so I think they will.
And that's interesting because as you're explaining that, I'm thinking, with all of these new financially settled products and these ETNs that don't really do anything other than offer exposure to price, the miners offer a very interesting proposition because not only is there the profitability, but there's also that turbocharge by the price of gold in and of itself. So this is a very interesting dynamic that people might want to consider if they're thinking about going in the financial products, to not just go in a purely ETF, but actually get into something that can have upside based on the company and on the price of gold, both in the same. Does that sound like what I'm hearing, David?
Yeah, absolutely. I mean, if you own a gold company and it's the real deal to produce, where you've got some vaulted gold sitting in the ground. You might have 5 years worth at the current flow rate or 10 years worth or whatever. So you basically got vaulted gold along with your shares. And, once this thing goes the direction I expect it to go and lasts as long as I expect it to last, some of these companies will probably throw out some pretty good sized dividends. So, I mean, there's a lot the gold market, I think it was Barron's did a study recently, meaning like within the last year, might even be a little longer than that. And the gold index that they use is down like a 70-year low. I mean, if you want to buy something low, look at that gold market. And the market hasn't moved up a lot since they put that article out. So, it's just the opposite. Gold's the opposite of the stock market. And stock market's, toying with all-time highs. Does that mean gold's at all-time lows? Not really. It's actually done better than you might expect vis-a-vis how great the stock market's doing. But there's a lot of people out there, even the central banks understand gold's purpose, but most people don't. And they'll get that lesson someday, in my view, and it won't be that long from now because, again, that run to gold is going to teach everyone a valuable lesson about the monetary system.
And leave our listeners and our viewers, if you could, David, with what's going to be on the radar on your radar most as we finish out the month of October here.
Well, it'll be, the QE. I'll be explaining that a little further, what it means in the short and long term. And I'll also be looking at the metals, of course, and in an update on this environmental speculation that I like so well because it had some really, really major news that hasn't been made public yet. So I hope that comes out within the next month so I can write about it.
Excellent. David Morgan, I'd like to thank you for joining us today on Silver Doctors.
My pleasure, Paul. Thank you for having me.